Hello, ladies and gentlemen. Welcome to Saturday's chess show. My name is Sasha Starr, and today it will be a very unusual show for me and for everybody else. What's happened is that we are through the last days of summer. Finally, live chess is back. And a lot of my contributors to the programs, they're all busy with chess tournaments, with travel to chess tournaments, and otherwise, probably family matters and so on. So I decided to have this program all to myself. So now I can finally talk about anything what I want. And I started to figure out in the last couple of days what is it exactly I want to talk. There are millions of things that I would like to talk, but then I started to think, okay, why not to make something extraordinary, something so unique and unusual that even I became excited about thinking about it. So instead of showing you some great games of the past, that most of you know them, and but I still love them a lot. And remember, we spoke a lot about the correlation between chess and arts, especially music, visual arts, and many others, except maybe ballet. I don't really see how chess can correlate to ballet, but some people may correct me if I'm wrong. However, there is one area where I'm very keen of, and I'm doing that for the last 36 years. And I even have a show on IBM TV by the name Modern Investing with Sasha. So I started to think about the correlation between chess and investments. And it's well known fact that a lot of chess players, especially tactical chess players, they're doing very well in investments. I even remember time about 30 years ago when in US, New York, Bankers Trust Company, they hired tens of grandmasters to do their trading and investments, and they've done all very well there. So I started to think about, because I'm familiar with both investing and chess, what is the correlation and why, in my opinion, tactical players have advantage over positional players. Although I have to correct myself. I think tactical players probably will do very well in a more riskier way of trading, like option trading, for example. And positional players probably will do very well with the just investments in stocks and selecting which stocks and timing of their investment. We'll talk about it later anyway. So first of all, what are the common traits of chess players, especially on a higher level, like masters and grandmasters particularly, and good investors? First of all, there is a need to succeed. The person has to be highly driven to succeed both in chess and in investments. There is enormous learning process in both. So obviously in chess, the learning process consists of learning the moves and go through most, for example, you start with the endgame position, how to checkmate, and then you start to do some simple openings and so on. Okay, I'm not going to elaborate on that because this is well-known process. In investments, it's about the same thing. You have to understand what type of investments there are, what kind of stocks there are, what are the difference between, for example, high-yielding dividend-paying stocks and riskier stocks. I don't want to name any companies here, but some other time we'll do that. The very important thing, what unites both chess and investments, it's a responsibility for your actions. It's a very important concept because, for example, chess, unlike team sports like hockey or volleyball or soccer or anything like that, In chess, you are the only one who is responsible for the game, especially for your loss. And there's no one to blame, no coach, no your teammates, and so on. It's just you yourself. So the only thing is, of course, you have to learn on your mistake. You have to analyze the game. You have to understand why you lost it. So next time you will try to improve your game and avoid loss. However, in investments, it's the same thing. You are the only one responsible for initiating position. Whether you buy stock or you sell short or option trading, you initiate spreads or anything like this. We'll talk about it later. But no one else, it's just you yourself. And I caught myself several times in a situation when I decided to initiate position. Let's say I decided to buy a stock, just to make it simple. And before I do transaction, I always question myself. Okay, I decided to buy stock. I believe that it will go higher, but actually, I'm buying that shares from someone who owns them already, and he sells it just on the reason that he believes that they will go lower, and therefore he has to dispose them. So I making a decision to buy something what other person make a decision to dispose of. Who is that other person? Is he a fool? Or maybe he is top-notch professional who's been trading for years and who probably works in top-of-the-line investment houses like Goldman Sachs and other. And who am I to trade against him? So probably I will still go ahead with my decision, but I will definitely question. I will check one more time what I'm trying to do and whether maybe if I believe that he's a top-notch professional and he's doing the right decision, maybe I'll have to completely change my strategy. And instead of buying that stock, maybe short sell it and just follow the example of what my vis-a-vis is doing at that time. On the other hand, maybe he's just a beginner trader and he maybe made a couple of points and he wants to get out. So this is important decision to understand. And again, this is part of your responsibilities. Like in chess, so is investing. Now, what other traits is common for both is that both essentially um, a fighting endeavor. So in chess, you fight your opponent. And it doesn't matter whether you are playing some club player or you're playing, say, a master or you're playing a world champion. There is a process of fighting. You have to, in order to win the game, you have to prevail over your opponent. You have to dominate your opponent. You have to, I'm not going to say kill him, but close to it, right? Okay, so is in investing. In investing, your opponent is not any particular person. It's all world. You are fighting against all world, the best of the best. And that's what the great difference between chess and investment, that unlike in chess and investment, you can actually use the forces to your advantage. So if you agree that the greatest success in investment is when you are identify a trend and you are just follow the trend. So if you are going to say the trend is your friend, so why want to fight your friend? Unlike in chess, when you're sitting across the board and whoever sitting across the board is your enemy and he wants to destroy and dominate you, it's entirely different situation in investment. In investment, you have to identify a trend. Sometimes it's difficult. Sometimes it's a kind of a trendless market. Let's see these days, for example. Of course, I'm trading only U.S. Stocks, Nasdaq, and the New York Stock Exchange. Right now, there is a tug of war. There are some investors who believe that inflation is a great thing and the interest rate will go higher, and therefore the market will have its correction of 10% or more. And there are some other people who believe that there is no way for people to invest money any meaningful way except stock market. Okay, the only other way which makes some matter is to put your money in a mattress, but it all depends how big is your mattress. Sometimes some people don't have large mattresses, so those people may probably end up investing in stock market, and there are some spectacular gains quite possible. Now, so in investing, unlike in chess, you don't have uh, identifiable opponent that you're trying to prevail and beat him. No, it's all world investing in US stocks. And you are not competing with the world. No, you have to think and forecast what most of the investors, which means the market. The market is the voice of all millions, if not billions, of individual investors compressed into something, and that entity will act in a certain way. And the better you will predict which way it will act, and of course, then we are applying that to any individual stocks that you want to deal with. That's how you will prevail in investments. There is something else I would like to do to mention that in last years there is a proliferation of computers, both in chess and investments. And well, we know what's happened in chess. That well, that's a special theme for discussion. But just to mention a few is, of course, the computer changed the game irreversibly. There are a lot of problems with cheating in chess, including on a very high level. Now, in investment, so again, it's there are some positives, of course, too, but I think negatives far outweigh the positive things. Now, in investments, computerized trading, of course, changed it completely because they can change their direction during not even a day, during a minute, back and forth, and they can try to extract every 1/16th of a point and so on. So of course you are not able to compete against computerized trading, but as a trend is concerned, you can do even better than computerized trading because you can take a position and run with it. Whether it's computerized trading, it's going back and forth, or so on. So again, I'm not trying to suggest that you are going to beat all computerized trading. It's not going to happen for sure, but you have many ways to profit from your investing. And now we have a special program on IBM TV about investing. It's called Modern Investing with Sasha on Wednesdays at 1 o'clock. And I would like to give you a feel of this program. Thank you, and we'll start right back. Hello, I'm back, and now let's talk more about chess and investing. Now, first of all, to be successful in either chess or investing, or in both for some people, you have to create your own path to success. what it means, for example, in chess. Okay, in chess, if you're playing on a certain level, I'm talking about most of the international masters level, grandmasters level, or even top elite grandmasters players. They have developing over the years their own taste for the game, their own style, their own openings that they prefer to play, and they know really well. And that would give them probably most likely edge against their opponents who may not know this opening so well. And so this is just some of the factors. It's not, by all means, it's not all, but it's some of the factors that would helpful to create your own path to success in chess. In investing, um, that will take some studies and some. The best way actually is your own personal experience. When I started to invest, nobody ever taught me how to do it, what to do it, or so on. So once I had a brokerage account and some money available to me at the time, I just started to learn. Likely for me, I didn't have really huge losses. I had some losses for sure. So I was able to see the most important thing in investments is preservation of capital. And that I was always mindful in my decisions. So, although by nature I'm a very risky person, but in investments I was trying, especially now when I have experience and knowledge about that, of course, I'm limiting my uh, ability and love to risk to great degree, and that helps me to address the preservation of capital. Now, creating your own path to success in investments. Investments is different from chess in a way that in chess you have 64 squares board, you have 16 white and 16 black pieces, and you know how each piece and pawn moves. So basically, that's all there is to know. And another most important thing is that both players can see the same board, the same pieces, and so there is no hidden information from whatever is right there on the board. It's very different, though, situation in investments. Although right now there is a great transparency, you can go on almost any site like Yahoo Finance, and you can find a great deal of information about stocks and markets. But there is a certain hidden knowledge about each particular stock. For example, if there is a preparation of merger and acquisition, or there is a great deal discussion about future earnings, and of course that information is available only to so-called insiders and their friends, and may not be available to large public. So these people have um, advantage in the trading. And although there is a security commission who is watching insider trading and sometimes put even most prominent people to jails for violating the insider trading, but it's still there. And you always have to be mindful that you know a lot of information, but not all. So there are some other people who, because of the access to information, may know more. But it doesn't mean that you are going to always lose all your positions, because if it would be so, nobody would ever invest in stocks. So you can still continue to invest. And the only thing is you have to protect. Always have plan A, plan B, plan C. We'll talk about, basically, I'm talking about the management of the trade. We'll talk about it a little bit later. So a lot of things are actually based in both chess and the investment is recognition of patterns. Obviously, in chess, there are a lot of patterns and a lot of positions that are well known, and you already know what works in certain positions. Like, for example, you want to certain positions, you sacrifice bishop takes h7, and then knight g5, and so on, and it works in many positions. So there is a pattern that you recognize, and there are many other patterns, of course, and you use them in your game or analysis of the game or so on. Same thing is almost same thing, I should say, in investing. Investing, there are certain patterns. For example, a lot of people are using charts for making their investment decisions, and when they see certain pattern, which in most of the cases, I shouldn't say all of the cases, but majority of the cases, generate a certain pattern which leads you to make an investment decision, whether to buy certain stock or to sell certain stock because of the recognition of the pattern. So if you'll do it on a measurable scale, you're not going to invest all your money into one position. Never do that. I did that once very successfully, but it doesn't mean that anybody should do it. I think ideally you should get familiar with two, three stocks that you really understand well. What they're doing, what's their product, what's their chart pattern, what's the history of that. And you don't need these days. Everything is so transparent. You don't need to do a lot of research. I mean, 30 years ago, somebody would have to go to local library and get all this investment books and magazines and so on. Today, everything is right on internet, so you can research almost any stock. I could do it in 10 minutes. And actually, sometimes too much knowledge is not really good for you because see, when I know some people who research certain stock to such a great depth, and they spend weeks and months doing that. And I always question that approach. Why? Because at the end of the day, all they will do, at the best, they will know just as much as other top investors already know about the stock. So, what's your edge? If all, at the end of the day, all you will achieve, you will know just as much as other investors. I don't see an edge there, and in fact, it restricts your investment decision rather than helps, because now you know about the company's previous problems, and you know so much about the management, and some of the managers are very good, and some of them are not so good, and so on. So how does it help you? Because everything, at the end of the day, everything is in the price of stock. So that's the most important thing, is what's the price of the stock at any given moment, where it was before, and when do you think it's going. That's probably the most important thing. So recognition of pattern is very important means of making progress both in chess and in stock trading. And of course, the best players in chess, they create their own theory, their own set of positions where they know to perfection, and they have edge over their opponents. So is in stock trading. I think that everyone, after trading for few months, few years maybe, they create their own. See, there are so many different stocks around, so many different strategies, so many different. I haven't even talked about options yet, but there are so many available ways successfully trading stocks that you cannot. I don't believe that anybody can do everything. So eventually, you specialize in something that is attractive to you. You understand well. You get a good feel of what's happening, and you're doing that with certain particular stocks. I'm following very closely just a handful of stocks really. First of all, Nvidia, Zoom, um, General Electric, maybe, of course, all high-paying dividend stocks like Pfizer, like for example, Altria Group, Enbridge, which are paying very good dividends, and you more or less. I'm not even, I can't even say that I understand very well. For example, Enbridge, it's an oil and gas company, it has pipelines and so on. And if okay, I can go into all particular news about the company, that they have some pending lawsuits in the United States against certain pipelines and so on. Now, okay, what good does it make it for me? It's already in the price of the stock, because if it wouldn't be a lawsuit pending in the United States, their stock would be not like what is now 38 and a half. It would have been probably 48 and a half. So of course this is already affecting the price of stock. So why would I care about that? I really don't. Now, before I finish, let me tell you about the most important difference between chess and investing. In chess, you unfortunately sometimes lose the games. Some people have it losing more often than others, but even world champions lose the game. And they're obviously trying to learn from it, so to avoid it next time. However, what's good about it, that once, let's say you made a mistake and you now understand that you're losing the game, and at the end of the day you lost the game, you got zero, and that's all. Now you can study this game and learn something from it. It's a very different situation in investments. Unfortunately, when you have a losing position, that, unless you terminate it, it will keep going down and lower, and instead of like cut your loss and lose a couple $100 here, now you're losing $2,000, and it's not even the end of the story. If you will not cut, mind you, it could reverse as well. Okay, it's not so horrible as I'm trying to say. But my point is that unless you terminate your loss in chess, you lost the game, you are checkmated, and that's all. Your loss is done. In investments, you can go lower and lower and lower and lower, and you may read on one position. All of a sudden, you can lose a lot of money. So normally in investments, you have to terminate your losses. It's a management of the trade. It's a money management technique. We'll definitely talk about it later in next program. Now, welcome to attend Wednesday's investment show, and I'll see you next Saturday here on the Chess Show. Thank you very much. My name is Sasha Starr. Bye-bye. See you next week.